Okay, everyone, let's take a look at what happened in the stock market today and what is possible or likely for tomorrow. Obviously, these are prediction videos. There's no guarantees in the stock market. I make decisions in the market that are wrong every single day, including today. I lost money today. But these are my expectations based on what we've got for price action and candle structure. So, what do we have? We have a red bar, pretty significant red bar. The volume is light. The volume is not nearly as heavy as it was for the last four sessions. So we have a lighter volume day, which is red, but we have a higher high and a higher low compared to yesterday. But we closed below the close of yesterday. So there's some pluses and some minuses. The plus, obviously, higher high, higher low. Low volume red day. There's nothing wrong with a low volume red day within an uptrend. Can this go higher? It certainly can go higher, but we don't know if this thing's going to reverse, right? You never know. So if it reverses and it comes back down, certainly we've got a red day today, which closed at the lows. So we can expect more downside tomorrow, at least intraday. Maybe it reverses and goes higher, but certainly at some point during the day, we're going to get below the low of today. So where could it likely go? Well, this line right here is the midpoint of yesterday's candle. And this line here is the midpoint of 2 days ago, that candle. Likewise, this dot is the exact midpoint of the fair value gap that was created between today and 2 days ago. And this white dot is the midpoint between yesterday and 2 days before that. So that's where these white dots are. Every time there's a fair value gap, that white dot shows up at the exact midpoint of the fair value gap. And markets do like to go back and test the midpoint. Now, if they go back to the midpoint and bounce off of it and go back higher, that's very bullish. If it goes through the dot and fills the entire gap, the fair value gap, that's quite bearish. That means it's going to continue going lower. So that's going to be a tell is, to what extent does it go down past this dot and fill the fair value gap? Now, let's look over here on the 15-minute chart, which includes after hours action. As you know, if you watch some of my videos, whenever you see an impulsive move up that has basically bad structure, then that's likely to be retraced at some point to the origin of that impulsive move. So here's the impulsive move from yesterday. This was a huge impulsive candle with poor structure. So we're at some point we're likely to come to the base of this, which is the origin of that impulse. Now, the day before, we had another impulse, which wasn't as big, but it was also a very big day. So at some point, we're likely to go to the base of that, basically the order block. So the low bear was the lowest bear candle before the impulse started. So we're likely to test the low bear of this impulse at some point and this impulse at some point. Now, will that happen tomorrow or the next couple of days? I don't know. Could this whole thing reverse and go lower? It certainly could. And if it does, it would constitute a failed breakout. And from failed moves come fast moves. So if it does fail, I expect it to swiftly go down to the lower end of range. But there's nothing to say that it has to do that. I think it'll go lower tomorrow. It'll either test the midpoint of yesterday or this white dot or potentially the base of this candle. But at that point, I think that support, keep in mind, that's also the previous all-time high. So the base of this candle is significant support. So if it does get down here, I'm not saying it will, but if it does get down here, then we can certainly expect a bounce, at least an intraday bounce, but I would imagine more than that from the base of this candle. And again, on the upside, keep in mind, you see these numbers, that's the sequence counter. So the sequence counter goes up to 9 days, where the close is higher than the close of 4 bars ago. We're now at 5. This always starts counting as soon as it qualifies, and then those numbers disappear as soon as it no longer qualifies. So when it's 1, 2, 3, 4, it really doesn't mean much. But once you get into 5, 6, 7, it starts to mean more. Mainly because more people are watching it at that point, and so it carries more relevance. So we're now at 5. Could this go higher? It certainly could. Again, we did this yesterday, but we've got a couple of 200% extension targets up here at 800, which would be 8,000 on the SPX. And we have a bunch of congestion here in the 780 range. So just things to keep in mind. And if this does continue for any significant length of time, then we need to consider the possibility that we do a Fibonacci extension on this entire move, this being a flag of this initial impulsive move. So let's just do that quickly just to see. This is going to be crazy because this was a huge move, but let's just see where it puts us. So from there to the high, that's the flagpole, and then down to this low is the low that we had of the flag. So let's just see where this potentially could take us. It could take us all the way to 847, so basically 850. So if we have a measured move extension of this flag, that's going to take us all the way to 850. So I'm not saying it's going to get there. I'm saying we need to be cognizant of the potential and how these Fibonacci extensions work. They're remarkably accurate. It basically is saying, okay, if that was the size of the initial move and we've got a flag in the middle, then you can anticipate the second part of the move being an equal size vertically as the initial one. Now, generally speaking, the slope of the first half is steeper than the slope of the second half. So generally the second half will take a little bit more time to get to its target than the first part of the move. That's not always the case, but generally speaking it is. So just things to keep in mind. I know we've got a lot of different lines on this chart, but I want you to have an idea of where this potentially could go if the market continues to push higher. Thanks for watching this video, and we will see you again tomorrow.